What up, HyperChange? Welcome to another episode. Today, we're going to recap Tesla's Q1 2018 financials. They were just reported after the close of the market today. Conference call was right after it. I actually got on the conference call, asked Elon Musk a question or two. I'm still basically in complete shock right now. Little rattled, just still shook, processing this entire epic situation. The biggest thank you to everybody who supported HyperChange in the mission to give retail investors a voice on the conference call. It could not have gone any better. So I'm just so thankful for everybody who reached out with ideas for questions, vouching for HyperChange. Thank you so much. So for this episode, we're going to go through Tesla's financial results, what they reported for the quarter. Then we'll do an analysis of the conference call. And yeah, it should be awesome. Let's get right into it. So Tesla for the quarter reported revenue of $3.4 billion. This was a record that the company has ever reported. Operating loss was just $600 million. And although that sounds bad, this was way above my expectations for the company. I had been expecting $3.3 billion in revenue with a $700 million loss. So Tesla beat both of those metrics. Revenue growth coming in at 26% year over year. In terms of gross margins are still very weak. Although they did come in slightly above my expectations, they were about 13.3%. I've been expecting about 13%. So I'm expecting those to start reversing trend and going back up next quarter as they ramp Model 3 production. Additionally, Tesla Energy revenue with a massive quarter, over $400 million in revenue, up nearly 100% year over year. And this was completely organic growth for Tesla Energy. A huge bump in this revenue was the installation of that 129 megawatt project in South Australia, the world's biggest battery at the time. So really impressive to see the growth in Tesla's energy business. Although it is important to note the gross margin on that energy business was just 8.5%, which was much lower than we'd like. So I'm hoping that that rebounds as they get more scale there. A couple other tidbits for the call. Tesla is still planning to hit production of 5,000 Model 3s per week in about 2 months or at the end of Q2. Additionally, they address concerns about how over-automation has led them to hire a bunch more people and, change up their manufacturing plans. So they address in the shareholder letter that this is not changing the profitability trajectory of the Model 3. They're still expecting to hit 25% gross margins on that vehicle, although it's slightly delayed. So that was really important to know as well. Additionally, Tesla reduced their guidance for CapEx from $3.4 billion to under $3 billion on the conference call. They actually alluded to they may even have a little bit more wiggle room there. That was great news. Cash balance overall down to $2.7 billion. They lost about $700 million quarter over quarter, but important to remember that about $660 million of that was capital expenditures for the future. Tesla's core business is actually not that capital intensive at all from a cash perspective, despite what the skeptics will tell you. Also, the biggest thing is the company reaffirmed that they are expecting to hit positive net income and positive operating cash flow in Q3 and Q4 of this year. There was that crazy tweet from Elon to The Economist about this. So really important to see that in the shareholder letter as well. So overall, I thought this was an awesome quarter. I mean, the biggest takeaways are Tesla has a bigger cash cushion than we thought. Their revenue growth was better than expected. Their loss was lower than expected. They're still on track for Model 3. So all good news from the shareholder letter. Okay, on to the conference call. Starts off with an introduction from Elon Musk. Says our shareholder letter says a lot of what I wanted to say. We're going to focus on Q&A in this call, and we're going to have a ton of time for Q&A. What I'm most excited about is the increase in output in the last 24 hours at the Gigafactory. Elon mentions that the company achieved a sustained rate of 3,000 packs per week over a 24-hour period, and in fact achieved a burst peak production rate of 5,000 cars per week or packs per week at one point in the day. So really promising. No battery production is on track. And Elon also wanted to clarify that although the majority of Tesla's process is still automated, they did over-automate in some areas that were just really poorly suited for robotics. And in those cases, they've replaced them with human workers, but that isn't going to actually have an impact on the profitability of Model 3. It took them 7 hours to make a pack 3 weeks ago to under 70 minutes to make a pack now. This is proving that radical improvements in the production process are indeed possible. He also says that in the shareholder letter, they included this chart, which shows that the Model 3 is on track to be the best-selling mid-size luxury sedan in the U.S., despite having all these production issues, outselling all of these legacy brands. He actually expects that in the long term, the Model 3 could get a majority market share in its segment. That's over 50%. He says later this year, he expects the Model 3 to have 30 to 40% market share. This is insinuating hundreds of thousands of sales of the Model 3 in the U.S. alone. This is something that HyperChange has been expecting. Elon has alluded to before, but really impressive to hear him say it right on the conference call. Also, he said he's feeling very confident about positive net income and positive cash flow in Q3 or Q4 of this year, but it is not a certainty. So they did caveat it a little. Also, they're conducting some sort of restructuring or reorganization of the company in the next month. So that is what it is. Okay, on to the Q&A period. First question is from Barclays. Want to talk about the 5,000 week production rate. Is that assuming 24/7, or when do you get a 5-day 2-shift operation? Elon's like, well, that would be a terrible idea to do 5-day 2-shift. Everything we've always done in all of our production facilities is 24/7. That's how we get the most out of our CapEx. JB chimes in too and has said, yeah, of course we're running these 24/7. We've literally done that since day one of Model S as well. There was one more question that I didn't fully understand, but Elon does add a tidbit, which I think is very valuable, which he says that a company that can just double the speed of its production line to double production instead of building an entire other factory will be far efficient from a CapEx perspective. So it sounds like a lot of the brain power at Tesla is really going into how can we ramp up the speed of this production line, not necessarily how are we going to build a new facility. I couldn't quite hear who the next caller was, but they were basically saying adding humans into the production process, is this going to affect the margins? How do your labor hours per vehicle stack up versus the competition? This was pretty much answered in the shareholder letter. The gross margin on the Model 3 is fine. It's actually, they're saving money in some scenarios because they don't have to hire all these incredibly expensive robot technicians to maintain the robots. I mean, my personal opinion is this entire focus on Tesla's over automation, now they're going humans, is just way overblown. The bottom line is, they took a tiny little sliver of their production and have moved that to humans from robots, where robots were just simply impractical. These are the learnings that Tesla's going through, growing pains as they become a super advanced manufacturing company. So I don't think it's anything out of the ordinary there. So I'm not really worried about that at all. Then the next question is about how advances in battery technologies referenced in the call will carry over to, savings. What kind of metric can we extrapolate from this? Really interesting to note here, JB said that different commodities could be pressuring, the price of the EV batteries in the long term. And so their reduction of cobalt in their batteries, something they've been working on for years and years, because I guess they have a thesis that they don't want to have exposure to the price of cobalt. So they're reducing that in the battery pack. I know a lot of the bear theses have revolved around, the amount of raw materials that go into Tesla's batteries and how the cost of that will keep rising. And Elon even mentioned that this will be extremely helpful in reducing the price of the batteries. Morgan Stanley says, do you want to raise capital even though you said you don't need to? Elon says, no, I specifically don't want to, and seemed incredibly pissed by that answer. So I guess that says it all. I mean, I kind of would have asked that too, because, Elon has said the company doesn't need to raise capital before and then gone on to raise capital. It's a little bit contradictory, but I guess he's indicating that this time is different, and I do believe him, but I think this was a totally fair question for Morgan Stanley. Of course, it's Adam Jonas, so he's getting a little wild here. Your cars produce a ton of data. SpaceX is launching this broadband internet. Elon cuts him off because he's like, in a year, SpaceX is launching this broadband internet. Elon's like, probably more like 3 years, making a joke out of his own late timelines, I guess. And then kind of, avoids the question, saying, maybe we'll use SpaceX for internet, but it's too far down the road, and then just kind of moves on. Tamburino, our favorite from Goldman, talked about downtime for the quarter from the Model 3. How is this going to affect production? Basically, Elon said that general assembly is their biggest risk right now, and that's something he's going to be focusing on a lot this upcoming month. There's not huge brain surgery that is going into ramping production in terms of how hard it is. It's just a lot of tedious work, and that's what they're looking at in the next month or two. Also, Elon goes on to say that great production is really a software problem. Everyone in the auto industry needs to get good at software to improve production. He says Tesla is the best in the entire business at software, which I believe, and is a huge backbone of my thesis why I'm invested in Tesla, is their skills and superiority to develop software, because that's only going to get increasingly important, not only for vehicle production, but also for autonomy. Elon also says that the Model Y will be a manufacturing revolution. Tamburino asked what the timeline for the Model Y is and if they started to spend on it. Elon's basically like, well, we kind of have barely started to spend on it, but no significant CapEx for the Model Y until 2019. Nomura, Romit Shah, just want to clarify gross margins in the letter. Medium-term gross margins will be below the 25% target. What does that mean? It's just trying to get some clarity. Basically, Elon says we're confident in hitting above 25%, even high 20% next year. We think we can hit 25% in Q4. So, it seems like they've slightly delayed, the improvement in Model 3 gross margins, but once again, they're sticking by that 25% target in the long term. That's the most important thing in my opinion. Deepak also noted that they're going to get progressively better at gross margins each quarter from here on. So I'm hoping that we see Tesla's overall gross margins, start to improve from that 13% level and go back up. Also, he asked Elon to comment on Jim Keller's departure, the chip architect, super high profile. Elon basically says Jim's a great guy. He had a dream he wanted to pursue for a while, develop entirely redesign how server architecture works, which Elon even kind of throws shade saying like that's not that much of an interesting problem to me, but he wanted to do it. So it just sounds like there was an amicable departure. He worked for Tesla for a couple years, probably did a lot of really important stuff. Elon mentioned that Pete Bannon is still the guy who's in charge of that program. He's someone who's worked with Jim Keller for a long period of time, and it seems like he's even almost always been in charge of the hardware for Autopilot. So it still sounds like all their plans are on track. No big deal that Jim Keller left, although it's not ideal. Then Bernstein asked, what about CapEx? How did you guys, were you able to reduce it? Deepak's basically like, we just got more efficient at spending, just all around doing better than we thought. And actually, even though we lowered the CapEx spending guidance to $3 billion, we actually think that leaves us a significant amount of cushion or wiggle room to actually spend more on different projects if we want to. Then this was the mind-boggling part of the call. Elon cuts off the analysts and basically basically just takes over the call and says, let's go to YouTube. I'm on the call, waiting to call in. I've been in contact with Tesla IR. They know I'm going to be on the call. They know I have questions prepared. Bam, dialed in. So then I just got to ask all these questions. Forgive me. This is the part of the call I actually have by far the least notes on because I was so intent in the conversation. So the biggest question that I was concerned about is the Tesla network. Or not really concerned, but just like, what's an update on the Tesla network? Why haven't we heard about this? Waymo's launching their self-driving service. And I didn't get a timeline, which was a little bit disappointing, but I did get a couple interesting tidbits. One, that a timeline is really difficult to predict for autopilot and self-driving because it depends on regulators. And the problem with regulators and waiting for regulation is there's this massive misperception in the media that autopilot and self-driving cars are not safe because every time there's a crash, it gets reported like crazy, but if you actually look at the data, Tesla's autopilot cars are much, much safer. So it looks like Tesla, as a response to this, Elon said that they're going to be releasing autopilot data on a quarterly basis now to try to quell these concerns that their system isn't safe. And the way Elon puts it is all these people whose lives are being saved by autopilot, they're not complaining. They don't even know what happened really. So you're getting a very skewed look at the data with the mainstream media. And this is a big hurdle towards full autonomy. The other thing he mentions, reaffirming once again that the hardware on all cars right now is going to be enough to get them to level 5 autonomy. The only potential thing they would need to improve is to switch out the computer to be able to process more, for more processing power. And this is a really easy plug and play switch that it seems like they've already, designed the car with that in mind. An interesting tidbit, which is a lot of the autopilot crashes come from experienced drivers who've been with the system a long time and, get more confident in it and then sort of ease up on how much attention they're paying to the road. And that's when the crashes occur. From a technical standpoint, it sounds like Elon Musk is still expecting fully self-driving capabilities or something along those lines. I'm not sure if I remember this right, but by the end of 2019, I believe. But once again, regulatory approvals are probably going to slow up when full autonomy gets to the consumer level. My guess is it won't happen until, 2020, 2021 at the earliest. Then I asked him about the Model Y production and the semi-production, where's that going to be? Reuters had a report indicating that Model Y production would begin at Fremont. He basically said the Reuters report is based on nothing. We don't even know where we're building Model Y. It's not going to happen in November 2019, probably 2020, at least about 24 months from now. The location is not decided. He didn't, give me any information about whether they're building the semi either. Then I also asked about the supercharging network, V3 of the supercharger. This is something that Elon has referenced before, but also something that JB on the last conference call said that they wouldn't be improving materially. So I just wanted to get color. It seemed like a contradiction, especially given the fact that Porsche claims to be rolling out a 350 kilowatt supercharger, which would be about like triple, the capacity of Tesla's in the near term. So I'm wondering why is Tesla falling behind? And basically, their answer was kind of similar to the last call. There's a very big trade-off in terms of cost and range of the battery if you want to make it charge a lot faster. Elon has a very interesting analogy here when he's saying we could build a cell phone that could charge in 10 minutes but only lasts you 2 hours, or we could build a cell phone that charges in an hour and lasts you 2 days. So that's kind of the philosophy behind their supercharger network. Also asked them about whether they'd ever open it up and whether it's a walled garden or and what kind of approach they're taking there. Elon basically said that, he expects, they're open to having another automaker help them with the cost to build the network and let them into the network, assuming they can comply with the charging standards, but no automaker's taken them up on that. I sort of went a little deeper there and was like, well, okay, why is that not a moat for Tesla? It's taking you guys 5 or 6 years to build out the supercharger network. This is a major competitive advantage in my understanding. Why not keep this? Elon's answer is basically like moats are BS. It's all about the pace of innovation. Essentially we need to be building the next moat by the time we just just complete this moat, because the second you rest on a moat, you're just waiting to be disrupted. So that was a really fascinating philosophy. Although I will say in the case of the supercharger network, I do kind of feel like they should keep it closed because it's such a big competitive advantage and moat in this instance. Also asked about the mega charger situation with the Tesla Semi and whether that would ever be a profit center for the company, charging revenue from all of these trucks. JB basically chimed in and said they're not even thinking about that yet. That's too far down the road. So that is what it is. But they also said there's a lot of interesting stuff they can do with building out batteries and renewable energy capacity to charge the Semi. And that's why they're able to, give energy at such a cheap rate. They also threw in this tidbit about how, if diesel even gets remotely more expensive, like every penny that diesel goes up in price, which is what the refueling Tesla's competition with, the equation to go to Tesla just gets even more economical. Elon also said that they were sued ridiculously by this company called Nikola, which is a hydrogen truck maker, based on the look of the Tesla semi truck. And then Elon's like, look, the look has nothing to do with sales. It's all about economics. We just made it look sexy because that's what Tesla does. So I thought that was kind of a funny tidbit. Then he goes on to say, that if they can deliver on the economics, this will sell well. And so I sort of went deeper there on like, okay, well, can this compete with rail? Will this expand the truck market? And Elon Musk sort of said yes. Like he thinks they will be able to take market share from rail, specifically platooning, where you have like 3 trucks in a row, is basically what a train is anyway. And once they can launch that technology on a mass scale, they're going to have a ton of different uses where trucking is economical where it wasn't before. What's up with Tesla Energy? It seems like they're supply constrained. It's not about demand. It's just about how many batteries they can build. Did the South Australia battery project create an inflection point in the utility scale energy markets? They gave me a little color on this. They are trying to prioritize Powerwall backlog for now because they have a super long waiting list there. Their backlog overall for energy just keeps getting longer and longer. The tidbit that I thought was really key, they want to announce a gigawatt hour project in the next couple months. It sounds like this is going to be way bigger than the Australia project. Probably came out of seeing the success of that Australia project. Why is Tesla seeing so much success for its batteries? Because as Elon explained, the batteries can respond to when they're needed and turn on and activate and generate power in the system so much faster than any other, form of burning hydrocarbons, that's really the competitive and structural advantage that these batteries have. And that's why they're going to continue to take market share. So super stoked about that line of the business. That's sort of all I can remember about my questions for now. I got off the call. Phil LeBeau from CNBC goes on, asked about semi-reservations. It sounds like in the back, someone said 2,000. So I guess they have 2,000 semi-reservations on the books, but they're not really trying to sell it. And it sounds like, the focus is not on the semi at all. The focus is on ramping Model 3 production. The company knows they need to do that. Elon even says, like, you're not a real company until you're a real company and make money. And so I think they're just laser focused on going profitable before, starting to expand R&D into all these other products on their roadmap. They also threw in like, we're quite appreciative of the government in China. It sounds like, I kind of reading between the lines here, that Tesla will be building a gigafactory in China. Still a ton up in the air on this. They're going to announce more details on it later. So that is what it is. Anyway, that wraps up my review of the Tesla conference call and the quarter. I mean, overall, I thought the financials were better than I expected. I do actually think Tesla will be able to achieve profitability in Q3 and probably definitely Q4. So I'm so excited about this inflection point in the company's business model. As I'm recording this episode, the stock is down 4 or 5% after hours to 280 something. I think most of that is because of what Elon did on the call, sort of going rogue and letting me ask a bunch of questions. I don't know why that changes Tesla's fundamental story. I mean, I thought this was a phenomenal report. The stock was trading up a little bit before the call started. My guess is the market reacts positively to this, but you never know. Once again, it's sort of been a dream come true to actually go from just having this moonshot idea of wanting to give you guys, retail investors, a voice on the Tesla call, actually making that happen and, following through, getting to ask as many questions directly to Elon as I did. I really hope that I get another shot on the Tesla call or can continue to communicate with the company and give you guys information about Tesla, because I think this was a super productive call and a ton of new stuff got answered. And so as a Tesla fan, I'm just stoked, and I'm so thankful for all of you guys who emailed in your ideas and the fact that you were vouching for me and just all of your support, blown away by that. So thank you so much. And I have to plug Patreon. This is how we fund HyperChange as an independent financial media company. If you guys want to check that out and support, please do it. Anyway, this is Tesla earnings recap. I'll see you guys next time. Peace.